Imagine if you would invest $5 every single day. Would you make money or lose money in the markets? If you've been following my channel for any period of time, you'll know that back in January 2022, I got this idea of what if I would invest $5 a day into the stock market and another $5 a day every single day into Ethereum for cryptocurrency. But recently, as of this exact week that we're in, the S&P 500, which represents the stock market, as well as Ethereum for cryptocurrency, went on a slide down. It honestly feels exactly like this image right here. Do you feel me on that? Well, let's talk VOO first. See, at the end of March 2024, just a mere short couple weeks ago, things were looking great. Portfolio up 22.43%. That's awesome. Simple $5 a day grew my portfolio that much. And that meant that my return, as a result of all those little $5 going out there, was a total of $933.77. That's looking pretty good, especially considering I didn't start with a lot of money. But today, as you can see by this 1 month chart, it's been nothing but down, down, down. And have a look at this right here. Now, here's my actual portfolio. I now only have a return of about $730 or 17%. So we've gone from a 22% return down, we've retreated down to 17% return. See, that's a tough situation. If you're looking at your portfolio and you're looking at it that closely to recognize that things are going up and down, when they go down, are you playing on the emotion of, oh my gosh, I was at $900 positive, I'm now only at $700, I probably should just sell all of this to make sure I can at least capture some profit before it goes down to say 500 or 400 or what if it goes negative? So over the last couple $5 a day update videos that I've done here on the channel, it's been generally positive news. And so I thought today's video would be interesting to take a look at it when things aren't looking good. I don't only want to post things when things are great. We got to be real. And I hope you appreciate this kind of video for that reason. There's a couple key tips that I want to share, some gems that I'm going to drop. Number one, I am in the long game. It's all about the long game with this one, which means I'm keeping this going for at least 10 years. 10 years from January 2022. So that means January of 2032, I can then reassess. You almost got to get into a point of saying, this is just going to be something slow and boring and something that I have to do. I just got to do this, which actually leads to tip number 2. And that is, I don't need the money. And if you get involved in any type of investing, whether it's $5 a day or you're investing in your 401k or you're going all in on like the biggest amount of money that you can invest every single month, you got to make sure you don't need that money in the short term or even in the near long term. The goal of investing is to let it grow over time. What you don't want to do is put in money that you actually need and then some crisis happens and you freak out and you pull out that money and you don't let it grow in the first place. Because if it does go negative, why would you sell at a loss? See, you don't have to sell at a loss if you don't need the money. If you're okay taking cash, putting it in a toilet and hitting the flush button, then you're good. And that has to be where our mind is grounded when it comes down to this kind of investment. The third one is, of course, you got to take emotion out of it. So taking emotion out of it means if your account goes down, like it has done this past week, I mean, we're talking from Monday to Thursday, only 4 days, the S&P 500 has dropped. And that has a lot of reasons behind why it has. But, oh well, okay, we were positive $900. Now we're positive $700. It stinks, but it's okay. Who cares? I'm going to keep investing $5 every day. You look at something like Ethereum. I was up over 90% on Ethereum. That's amazing. Now look at the total return, only up 66.13%. That's a loss of 30% if you look at it that way. But you got to take emotion out of it. I'm going to keep on keeping on. And if you take emotion out of this, you're playing the long game. I want to show you something. Now, this is the sheet that I use and I update this every single month. And you can actually look at my entire portfolio of this $5 a day in VOO, which is the S&P 500 stock market, all the way through. I update it monthly. And this sheet is actually published to my Patreon community. But let's look back here. I'm going to show you this here in January of 2022. See, here I start. And I'm investing this every single month, $5 a day. Okay, here's what we got. But look at my growth and loss. Look at that. In fact, if I just unveil all of 2022, let's have a look at how sad and depressing this looks. Now, here's what's going on. Sure, I can say, at the end of March, up 22%. But I couldn't say the same thing back in 2022. See, 2022 was a bad year for the stock market, but I just kept buying and buying and buying. Now, on the surface, this looks really stupid because what I'm doing is I'm basically throwing my money literally into thin air because, for example, if I, in this month, September 2022, you can see my portfolio overall was down $195. A month before, it was down $81. That's a $270 drop on my portfolio between August and September of 2022. So what I'm doing is I'm investing, if you look at $5 a day, it's about $155 a month I put in, but I got a negative return. Put in $155 and it dropped by $245. Yikes. So that means my total invested, as you can see right here, running total, that's the running total, of $1,395 is only worth $1,198. See, if I did videos back then, everybody'd be like, yeah, that's kind of a dumb idea, is it not? But remember, it's not about the short term, it's about the long game and taking the emotion out of it. Now, if you look at this, and this is something that scares you, you really have to evaluate, why am I afraid of this? Why am I afraid of this negative? Is there something that's holding me back? Maybe you need that money for something else. Because to be real, $155 a month is a lot of money. A lot of people could use that for paying off student loans or just dealing with the ever so high rising prices that we're dealing with this year and onward. So I understand the importance of that. But if that concerns you, you really got to evaluate the need for investing in the current moment, and you need to get yourself hooked up with a financial advisor. Because here, this looks all just terrible, but it's what led us to seeing that $900, now $700 gain overall. So if the market goes negative with my $5 a day challenge, which means that $700 that we're now at keeps going down, and let's say it goes back to where it was here, where we're negative $195, well then guess what? I'm going to keep on investing, because one thing that people miss, even though you're putting your money into this particular fund, whatever fund you choose to do the $5 a day on, it doesn't mean that the money just is evaporating necessarily. Remember that you're still buying the asset. Have a look at this column here, column C, total shares bought. That's the key to think about. I am buying, in this case, like 0.4 shares every single month with my $5 a day. Look at my running shares. It keeps going up from 1 share to 2 shares to 3 shares to 4 shares. That's what you got to focus on. Am I continuing to increase my portfolio, my ownership of those shares? Because see, what happens is over time, that will grow in profitability once the market grows overall. Let's put it a little bit more simply. So this is the closest thing that I could find in my immediate handheld reach, a softball. Don't ask me why I have a softball near me, I just do. But just to make this a little bit more sensible. Okay, so let's say this softball represents a share. And what you're going to do is you want to buy as many of these softballs as possible, because over time, you've heard these softballs are going to rise in value, and you want to take advantage of the prices today. So every month, you're going to buy one softball. A softball costs right now $1 a piece. So this month, we'll put down $1, buy a softball. Next month, put down $1, buy another softball. Now we have 2, and so on and so forth. But let's say in month 3, it no longer costs $1 to buy a softball. It drops in price to only 50 cents. Well, that stinks, because the other 2 softballs are now worth less money. But the beauty is, now you can buy an entire softball for only 50 cents. In fact, if you budgeted to buy $1 every single month, you could actually buy 2 when this price drops to 50 cents. Because, you got $1, it now dropped in value, so that next month, on the 3rd month, you don't just have 3 softballs, you now have 4. Because on that 3rd month, you bought 2. And that's what's cool about the stock market. The same type of thing can happen. Let's say then, months and months from now, the softballs are now worth $5 a piece. Imagine what you could sell them for, some very hefty profit. So the softballs represent the shares that you're buying in the stock market. As you can continue to accumulate them, as the stock price actually goes down, your $5 is able to buy more shares. And you can actually see that in motion right here. Look at what happens in January 2022. I can only buy 0.37 shares. But as the time ticks on and the stock market goes down through the year of 2022, I'm now up to, here it is at 0.43 or 0.45. My $5 a day gets me more when the stock goes down. And then when it goes back up, looking pretty good. To learn more about my entire series on the $5 a day challenge, check out the playlist right up here, and we'll see you on the next video.